So today I've got four key messages. Firstly, on the markets. Secondly, on economics. Thirdly, on commodities. And lastly, on Brexit. So firstly, on markets. Markets are behaving more rationally, and I'm very pleased to see that markets across the board generally are up something like 10% from their lows of a month ago, both in the US and in the UK and Europe. Also, it's nice to see that markets in terms of sterling has recovered. We're now above 140 to the dollar, for example, as opposed to below 140, and commodity prices have also been firmer. So secondly, on economics, the global growth picture is still largely unchanged, albeit perhaps at a slightly lower rate. We're seeing some slightly lower estimates coming in, but generally we're still growing. Economic outlook is supported by continued support from central banks, and we've seen a very large stimulus package from the ECB yesterday, which has seen a further increase to quantitative easing and further cuts on interest rates. So thirdly, on commodities, where our broad house view remains neutral, we've seen a big rise over the last month in the price of Brent crude, up to around $40 from $30, but that's still well below where we were at the beginning of the year and 12 and 18 months ago. And our house view remains very firmly that a weak oil price is very supportive for global growth. So finally, on Brexit, the debate is particularly intensive. We're seeing it all over the media, and no doubt in the run-up to the June referendum date, we will see an increase in volatility. But we think this is all about some short-term uncertainty against, broadly speaking, unchanged longer-term material impacts.